This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today for our program. I am Cesar Delgado. The corn and hogs ratio is off online because of the government shutdown from right now. Otherwise, what's impact on the report from the government shutdown? We were talking about it with Jason Franklin from the University of Missouri. Things are looking uncertainty for right now with China, and the livestock producer are concerned about the beef imported from Argentina for right now. Well, we will talk about this with John Heinburg from Total Farm Marketing. This been Back Roads of Illinois. The corn and hogs ratio is off online because of the government shutdown from right now. Otherwise, what's impact on the report from the government shutdown? We were talking about it with Jason Franklin from the University of Missouri. Hey Jason, how are you?
I'm doing well, Cesar. Thanks for having me.
Jason, how concerned about the corn and hogs ratios during the government shutdown for right now?
Well, that's right. A corn to hogs price ratio greater than 20 can be a good indicator of profitability for hog production. And when it remains profitable for an extended period of time, it can spur herd expansion. While prior day hog slaughter data, including prices, are still reported with the government shutdown, we have missed the WASDE report for this month. And that October report is particularly important for shoring up corn and soybean yield estimates as we move through the harvest. But we've seen this before with a missed October WASDE report in 2013 when the government ceased routine operations, again following an appropriation lapse. During that time, corn and soybean futures did not display characteristic short run patterns in terms of uncertainty resolution and price changes that normally occur around those scheduled USDA release times. So having that information is important, and the lack thereof only adds to the uncertainty that hog producers have been facing when considering herd expansion. The hogs and pigs report surprised analysts last time around as it contradicted pre-report expectations of herd expansion with the estimated smallest breeding herd since 2014. And given existing uncertainties about the economy, inflation, and tariffs and trade, it's understandable that hog producers have, as of yet, refrained from widespread expansion.
What is the importance for the ratios on the corn production?
Well, the USDA has been saying that they keep finding more corn acres, and that those yields are holding pretty strong. So as we get more uh, higher estimates of corn, the prices should be going down on that, making hog production more profitable. Of course, without the last WASDE report, we're not really sure what's going on since then.
Right. What is your position on the corn markets, especially with these prices for right now?
Well, fortunately, even without the WASDE report, we're not totally without information. A Progressive Farmer article on October 21st reports that independent field trials at nearly 300 locations across the U.S. suggest that corn yields are trending a bit lower than the USDA's last estimates and lower than last year, while soybeans are trending higher than a year ago. And if corn prices, in fact, do trend higher, that could squeeze corn profitability a little bit.
Where are we going to be in the beans demand without China for their hogs production?
Yeah, so historically, China is an important customer for the U.S., both in terms of pork and soybeans, accounting for nearly half of soybean exports, but has essentially pulled away from the table more recently with the trade war. So, China's plan to shift from soybean meal and hog rations to a mix of other protein substitutes such as rapeseed meal, palm kernel meal, rice bran, some others, then supplemented with synthetic amino acids could be feasible for its larger producers, but it's going to be more difficult for their smaller hog producers who account for 32% of the country's pigs, but typically lack the capital and technical knowledge to access precision feed tools and cut out soybean meal use. So, clearly reduced exports to China would have negative impacts on our prices that our producers receive. Fortunately, it sounds like we've started to ship soybeans to China, and that President Trump and the Chinese president have met and worked forward to an agreeable situation here as far as the tariffs go, and we're going to see some relief there, I think.
How much of maximum of beans export to China for every year and typically?
I don't have that data for every year, but they've been responsible for a large portion of our soybean exports over time, for sure. Nearly half of U.S. soybean exports on average in recent years.
Do you have any final thoughts on the government shutdown from right now?
Just that I hope they can come to some resolution soon. This affects so many people, from government employees to market participants and the general public, and to a lesser degree, even those of us in academia working with data on projects associated with federal funding. So, the sooner that they can come to a resolution with that, the better.
Thanks, Jason. I enjoyed our conversation for today.
Me too, Cesar. Thanks for having me.
Jason Franklin from Things are looking uncertainty for right now with China, and the livestock producers are concerned about the beef imported from Argentina right now. Well, we will talk about this with John Heinburg from Total Farm Marketing. John, how are you, buddy?
We are doing well, doing well. Getting ready for Halloween, daylight savings time.
Yes. John, let's start with our conversation about your thoughts with today's deal in South Korea with China. What is your main concern about this with China?
Well, this brought definitely a lot of volatility and strength into the market over the last couple of weeks. So we've been kind of building to this point, and sounds like we got the agreement on some framework. I don't know if anything's officially been signed yet, but China's back in the bean market, and that's something that everybody was hoping for. Now, my concern points, I got a couple. First off, they said they're going to lock in 12 million metric tons between now and the end of the year. That's actually a usable number for them. If you look at some of their usage charts and import charts, they got a hole in December and January, and that's where these beans are heading to, about 10, 12 million metric tons. So really, it's something they actually kind of need at this time frame. My biggest concern, though, is going to be a couple things. First off, do we outprice ourselves very quickly in terms of the marketplace? Brazilian beans now, without the Chinese business around, have been coming down in price, and I thought that was some of the reaction we saw on the overnight in terms of that bean price really falling, and then we snap back nicely on the demand prospects I think that are out there. So that'll be something we'll have to watch. I think it's something we're going to really have to watch. As you saw the trade today, all the strength was in January and March, and the front end of the market and the back end 26 27 was under pressure all day today, because Brazil's off to a good start with a potential another record crop, bigger than last year's 160 million metric ton. And realistically, the global supply of price in terms of beans is going to be driven by the Brazilian market, very much like wheat kind of controls the Russian market, or Russia kind of controls the wheat market. Excuse me. So those are some things we'll have to watch going forward in terms of that. What the competition from Brazil is something that's just not going to go away. But at least for the temporary, it's given some opportunities for farmers to get at least some more money and get some cash flow moving, a little more meat on the bone, even though we're still not probably profitable for most people. But it's still a lot better than where we were 2 weeks ago.
How is the beans futures for this morning session on November and Jan?
Like I said, we had a lot of volatility this morning with the prices. In fact, we got about a 40 some cent trading range, 40 to 45 cents today. So again, just kind of reflecting the volatility that was in the market. And I think a lot of that came from just the lack of clarity. You had so many headlines out there, and they're buying this, they're buying that. There's still a tariff on, there's no tariff on. And it was really kind of a sloppy start to the day. Now, gotta like the afternoon strength. January finishing 13 higher, trading well off the low, putting a new high close for this move. That's encouraging to see. Same with that November contract. So again, that's where the demand's going to be. It's going to be in the front end of the markets because of this demand for beans that they need here in the December, January window. And those are the beans that they're going to be buying, are these freshly harvested beans that are coming out of the fields right now.
Cool. I'm just curious about whether or not that they are losing our beans from Brazil for this winter. We were looking for this stuff, and then we will see for this. But how do we need more demand for their supply?
We've already lost out on a good share of beans from, compared to last year. But the USDA already had, the last report. We haven't seen one in a while. Probably not going to see one in November either, more than likely. Had some reductions in demand already in there for calculating that this will probably occur to some point. So that's going to be, again, the biggest thing going forward here is just the amount of competition from Brazil that's in this marketplace, and how the price of their beans kind of control where the market is going, in that regard. Immediately we saw some price differences happening, and the chatter was this week that the non-Chinese buyers were trying to source beans from Brazil because they were cheaper than American beans again, just given the way the market's been acting. So that's going to still be the big equalizer in all this here. Is just going to be the cash market, export market, in terms of the price difference between the United States and Brazil. And that could be one of those limiting factors that could keep things, unavailable in terms of U.S. beans on the global marketplace. Plus, at the same time, this rally's kicked in at a very nice time for the Brazilian farmer. They're completing planting right now. They got some opportunities to maybe make some sales out there for their new crop beans. Again, that's that March, April, May, June window is when the harvest really ramps up on those South American beans.
What is the fundamentals trends for today's deal in South Korea, John?
Again, again, the fundamental side of it, it's going to be interesting to see where these sales come in. Again, our carryout's relatively tight. Obviously the reduced acres is the biggest factor over the yield in that regard. Those lack of bean acres, shortens up that pile pretty quickly. So we'll have to kind of see how things play out right now. Again, we kind of need some USDA numbers just to at least give us a direction what they're feeling the national yield is, and in terms of some of the demand factors that are in this marketplace. Fundamentals, if China comes in, buys beans, picks up those 12 million metric tons, that's about 440 million bushels. That's going to probably tighten up the balance sheet just a touch more. And obviously with prices rising a little bit here, getting into the $11 window or higher over the next few weeks, we'll see where this wants to go to. That also tightens up demand too from other importers, as well as tightens up the margins on the crush and those things. Now, we've seen some really good moves in soybean meal prices here recently too. Some of that I think is tied to all the other deals that we signed in while we're in Malaysia here, in terms of Vietnam, South Korea, Cambodia. we signed a whole bunch of different deals. Now, those typically are soybean meal importers, as well as that deal we confirmed with Japan this last week. So those are some of the reasons I think we're seeing optimism in the soybean meal market. It's the fact that we're going to be maybe shipping some supply that way.
How about the technical buying really quick?
Obviously, a really good move this week. We took out the multi-month trend line over top of this market. And you go look at some of those long-term charts. We've been building the base for quite a while here, just range bound. So that gives us some momentum. Maybe
The cattle markets are having a conversation with non-starter with the beef imported from Argentina for right now. Gramscious is not happy with it. What do you recommend for the markets?
Yeah, obviously we've had a heck of a tumble in price, basically technically and driven more than fundamentally. And some of the reason we're finding some footing here, we've seen retail values continue to go up. Cash trade looks like it's going to be down, but firmed up off of early week bids. So that was kind of encouraging to see that, the fundamentals still kind of control the marketplace. But with that, at least nearby here, the top feels like it's kind of in. And in that regard, the sellers are kind of back in control of the marketplace. So obviously with producers, you've lost some value already. At least the cash market's still kind of hanging in there. So keeping those put strategies in place is the biggest key. Like to see a little bit of a bounce back, another $3-4, and I'm going to be aggressively covering December, February cattle, just in case this is a little bit of a bounce and fade. We see that from time to time in the marketplace. After a hard sell-off, you just get a little what we call dead cat bounce. And the next thing you know, they rip the rug out again, and the market continues to fall. So staying a little aggressive in the put buying side of it here. At least here, if it falls apart, you got something in. If it rallies, you got the cattle. But I'm not really looking at any risk positions such as hedges or sold calls, buy puts, mentalities, just in case this thing really decides to kick back in again, which, given the fundamentals, wouldn't surprise me in that regard.
Do you have any thoughts about imported beef from Argentina, John?
The interesting thing about that, we're importing records amount of beef already this year by a massive amount compared to history. The Argentina beef, it's not a number coming in, it's a number that's more available. We have a quota system with them. It was a quota of 20,000 metric tons, which then the market would kick in a 26.4% tariff on that Argentina beef. All President Trump did in his announcements was basically move that quota from 20,000 to 80,000 metric tons. Now, obviously, that does bring more supply in, but where does that really impact the marketplace? It's going to be in trim, it's going to be in commercial beef, things of that nature, ground beef that's going out to the consumer. That will keep those areas at least a little bit more stocked in terms of beef supply. But when it comes to driving the price of the carcass, especially now it's Christmas time coming right around the corner, 60 days away here, that we're looking at beef rib prices, and that's where the most value is in terms of cut in the carcass. We've seen a nice rally in the retail side here in the choice carcasses, select carcasses the last 10, 12 days. That's because of the beef Christmas demand that's starting to kick in. So realistically, again, yeah, we're bringing more trim in and lower quality beef in that regard to go into the ground beef trade, but still those prime cuts are still going to be based on the supply, which we can't change that quickly in terms of the number of cattle that are available to us. Again, we also had the meeting between Mexico and U.S., possibly thinking about getting that border reopened with those feeder cattle through. That's at least what Mexico was hoping for, and obviously we did not put any timetable on that yet. Some of the reason I think that feeder market has kind of bounced back up a little bit here the last couple of days. So with that, the fundamentals are still the fundamentals. Cattle supplies are not out there. Overall beef demand continues to be good, and that should be enough to hopefully support this market here as we hold off those last lows. But again, when the market kicks in technically, sometimes fundamentals are not the thought of the marketplace as traders can push this thing further than they need to just because of the flow of money.
Do you have any final thoughts about the fundamentals with these grains markets without or with China?
Again, overall, we got some good news here. So biggest thing is protect value if you want to hold bushels in. I mean, we're $1 off the low for beans. Not that we can't go higher. I mean, but I'm just saying if you want to hold the bushels, maybe see if you can catch us a little bit more of a late spring market or early spring market. Don't forget about put strategies. Lock in some of this gain for yourself. Same thing on the corn side of the equation. We do still have a large supply of corn that we got to work through. There is some movement on the balance sheet in terms of demand that could easily keep this carry out well into that low 2 billion window. So those are things I'm still starting to have those conversations with. I know everybody is excited. Market's getting moving a little bit here, getting a little bit more value added. But at the same time, don't forget that things can turn around very, very quickly with this environment. And puts right now are really cheap in some of these months to put a good floor underneath. And again, let's hope you're wrong when you buy a put and this market continues to climb higher because you got the bushels, because you're naturally long as the producer.
Thanks, John. It's been my pleasure to have you about your experience with the Bears.
Thank you, Caesar. And Packers are looking pretty good after Sunday night's game. So we'll wait for that matchup here in a few weeks.
Yeah, the New York Jets think than the Bears. All right, thanks again.
All right,
John
thanks, Caesar.
Heinburg from Total Farm Marketing.